How are commodities handling the return of market volatility? Will Rhind joins us now. He's the CEO of Graniteshares. Will, good morning to you. Let's begin with gold. Traditionally a safe haven. We've had all of this talk about inflation. The market goes nuts. Volatility goes through the roof. I don't see the gain in gold prices really reflecting that, though. Why is that?
Not yet. I mean, the typical reaction that the market has, and particularly with gold when you have volatility, is the market tends to flee to safe haven assets and predominantly the U.S. Treasuries first, and then gold comes in sort of as a secondary measure. Typically, you see a higher performance in gold when inflation really starts to build some momentum here in the market, and we're not quite there yet. So at the moment, people are buying gold alongside Treasuries in anticipation of higher inflation here and also a weaker dollar. But at the moment, gold sells off if Treasuries are higher and the dollar's weaker.
So you are long-term bullish on gold given what we expect inflation to do, is that right?
Yes, I believe that gold should be part of a diversified portfolio, and I think that the conditions for gold and commodities are right. We've had now 2 back-to-back positive years for commodities across the board, and these kind of conditions that we're seeing now, synchronized global demand increasing for commodities, including gold and oil, are kind of conducive to where we are.
Well, let's talk about oil. We have the prices up there, 61.24 on sweet crude oil, West Texas. Where do we go? It seemed to me that oil was heading up pretty strongly, maybe in the mid-60s range, and then kind of came back down. Is it all about those U.S. frackers just continuing to pump more oil into the market?
Yeah, and I think that, at least in the short term, it's all about the short-term supply-demand fundamentals. The market is well supplied at the moment, but what's keeping oil at this level or these sort of elevated levels is this big synchronized global economic demand for oil as global GDP increases. So the market is well supported from a demand perspective, and we've seen that in terms of the prices holding here and recovering quite quickly from from the shock after the volatility the last couple of weeks.
But, Will, could you argue that the influence of OPEC continues to fade as the output from the United States continues to gain ground?
The influence from OPEC is still very, very strong, and the cuts that they made are still working to a great degree. We'll see whether that can last, because obviously you have a few members there that want to try and buck the trend and start producing or pumping more oil. But at least as long as the embargo kind of stays in place, they can hold those cuts where they are, then the oil price should be well supported. Well,
and with that in mind, very quickly, Will, where do you see oil going from here? Does it go higher towards 70 or dip down into the 50s again?
I think if the market sort of volatility continues the way it is, you may see a further sell-off in oil. But I think if there's some stability from here, you could see prices start to move up again.
All right. I just want to pay less at the gas pump. Bottom line, I'm very selfish. Will Rhind, thank you so much for joining us this morning, Will.
Thank you so much.
Thank you.
No, I was thinking the same exact thing. Summer driving season. Great.
Yes, just around the corner.